Hello, ladies and gentlemen. Good day and welcome to the show. Listen, I'm glad to have you guys here on this Monday the 19th of October, 2020. You know, the whole center of the United States, you go to the East Coast, you go to the West Coast, it's blue. You go all through the center of the United States, it's red. This is an election race that's going on right now. And, you know, an awful lot of people live on the East and West Coasts. A lot of big cities and stuff, you know. And that's all blue. In other words, Democrat. And you go through all the middle of the country. It's all red, you know, and it's all Republican. And, you know, the country is divided right now. Now, this race, this election race, you know, it's really too close to call. And there's only 2 weeks now. 2 weeks until the election in the United States of America, United States president, two presidential candidates. Well, there's an incumbent. That's the president's already in place, Donald Trump, and then we have Joe Biden, who's running against Trump for the Democratic side, and it's going to be a big election race in 2 weeks. Too close to call, guys. Okay. Now, next thing we're going to move on and talk about is, you get a lot of people out there, I've seen it on the internet everywhere. They're thinking that we are going to have a deflation. And that the stock market, you hear it everywhere, the stock market's going to fall down to like 90% loss or 80% loss in the stock market, you know, they talk about. And then they talk about how the dollar's going to be worth more, so you should save your dollars. You know, and now what I'm gonna say is that's a natural inclination of the system right now to deflate. This is a natural process, what should happen, and this is what would happen if the government would just stay out of it, leave the markets to find fair market value. The system would deflate. In fact, it would deflate and deflate and deflate and completely deflate. You know? There's so much leverage in the system that this process of deflating would basically shut the system down. And this is why it's not going to happen. I would give the chance of it happening maybe 1 in 1,000. You know, and these people that are deflationists out there are thinking, hey, this is 100% chance this is going to happen. Because that's what it looks like is going to happen. And that's what would happen. But they can't possibly let it happen, and I'm going to explain to you exactly why. The system is so over-leveraged at this point. It's all debt. The whole thing is one big mountain of debt. Leveraged debt. Leveraged loans, and just endless. If it deflates, it's going to set off a trigger reaction. Let me explain. If you had a big long string of firecrackers, you know, say it's 4th of July or something, you know, and say you're a kid, you bought this big long string of firecrackers. If you said to your mother, I'm going to light off a few of these firecrackers, but I only want just a quarter of them to blow off, you know, so you lit the fuse and everything. Do you really believe that it's just going to stop after the first firecrackers blow off? No, it's going to just go bang, 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 bang. The whole thing's just going to go. And this is the way with the system right now. If any of these bubbles start to pop, it's going to carry the next bubble next to it down. And that's going to pop too, just like the firecrackers pop, you know? And what would happen is like if the stock market goes down too far, well, that's the bubble bursting, and it's going to burst the bubbles like the real estate bubble, and they're all interconnected. You can't see the connections, but it's money connections. And if they can't let any of them pop, because if the corporate bond market, say, popped, well, it would pop the stock market, and that would pop the real estate bubble, and they'd all pop, right down the line. Right down to your telecommunications companies, your power companies that run the power grid. So what would it look like if all that happened? If it all popped and we went into a deflationary, complete meltdown of the system, what would that actually look like? Well, the first week it happened, you know, the markets would all have to be closed and everything. And every time they try to open them back up, well, it would fall like a few thousand points, and everything would just start to melt down. But that would extend outwards. After a couple weeks went by, your power companies would start to melt down. Your like your local power company. They rely, because the banks would all start to go bankrupt, and the bank that they're connected to would go bankrupt, and everything. All of the gold in the system people have stored away in vaults. If your gold is in this. Now, I want to clarify something right now. This is not going to happen. Okay? Because where I'm going to go right now, what would happen is pretty dire. So I'm going to tell you guys, this isn't going to happen. What I'm going to say next isn't going to happen. But your power companies and everything wouldn't be able to make payroll, and your telecommunications companies wouldn't be able to make payroll, and all of the gold that's in the system and safety deposit boxes and held with storage companies, those banks would default, and so they'd take everything into receivership. The Brinks truck would come in and take all of the, if there's any gold in the vaults or any gold in safety deposit boxes or anything of value in there, they would take it all into receivership for the bank. And the whole system would basically go through a period of lockups. Now, I want to warn you guys again, this is not going to happen. But the power grid would start to fail because these power companies would go out of business. They wouldn't bring their employees into work because they can't pay them. They can't make payroll. The same thing with the telecommunications companies, and everything would just start to grind to a stop in the entire system. And what it would yield ultimately is the system stopping, is ultimately chaos would spread through the land. This would be a side effect of the system completely melting down, and everything basically, there would be no, like, saving dollars wouldn't help you in a situation like that. Because ultimately what would happen in the end is there wouldn't be anything open to spend your dollars on. Everything would be closed. Everything. Not one business open. And how do they bootstart a system that completely melts down like that? Well, you can't. Because it starts to go into chaos then, at that point. And then you can't start anything. You can't get anything going again. And they know this. They know that an ultimate meltdown of the system is what would happen if they let it go. They're never going to let it go. They're just going to keep pumping money in at this point. You know, I'm going to tell you guys honestly, way back in 2008, a meltdown probably would have been almost as devastating. Now it's worse. Now they've leveraged it up. They've leveraged it up and leveraged it up, and it would even be more devastating now. Everything was more interconnected now than it was back in 2008. But they couldn't let it happen in 2008. You think they can let it happen now? Not a snowball's chance and double hockey sticks that they could ever let it happen now. Because the system's so over-leveraged. So what's going to happen is, yes, you can get a market crash. It'll start to crash. It could drop 2,000, 3,000 points in a day. But they're not going to let it go that far. Maybe 5, 6, 7,000 points. And they're going to step in and say, hey, that's it. End the market crash. Up she goes again. They're going to step in with oobaloobaloobaloobas of money. You know, whatever it takes at this point. They're going to keep pumping money into the system. And so what we really have to be aware of is hyperinflation. That's what's coming. That's unavoidable. Hyperinflation. Because these bubbles are going to require more and more money to support them all the time. And it's a never-ending process until the whole thing breaks down into a hyperinflation in the end. That's where we're going. And that's what you need a plan for. That's why you need to put your money in hard assets. Because I'm going to tell you what, savers out there, your retirement funds, your pension accounts and all this, it's going to be gone. The countdown's begun. And what's hyperinflation going to look like? It's going to be bad, guys. It's going to be bad. But it's something that See, the deflation, there's not a chance you can make it through that. That's not going to happen. But if it did happen, there wouldn't be a chance you could make it through, because the system would completely lock up and freeze and everything would stop. The power would go out. Your phone wouldn't work. There'd be no gas, no way. Everything would just stop. But the hyperinflation, where it's going, things will continue to run, but poorly. And there'll be food shortages and stuff with the hyperinflation. But we can squeeze through it. We can muddle through it. And this is where we're going. This is where we're really going. It's going to be bad, but we'll probably be able to muddle through it. But we're going to lose our savings unless we invest them in hard assets. Unless we do it. And the longer we wait, at this point, the longer you wait to get your money into hard assets, the more it's going to cost you. It's as simple as that, Because if we do have a market crash at this point, this is going to increase the speed that the market goes up on the other side of the market crash. Because if the market crashes, this means more stimulus. That's all it means. And you know how the market rises on stimulus. So if the market starts to crash, it's going to mean more stimulus on the other side. Now, I've talked a little while. I want to get started with these charts. Let's open up the charts right here and take a look at what's going on. The first thing we're going to take a look at is the silver price today. She's up 34 cents. 24.51 today. Was up a lot more. Was up near 25 bucks, It's dropped back a little bit. But it's looking good, Gold price today. It's up $7.20, 1906.90. And it was up near 1,920 bucks. It looks like 1919 it was up to. And now it's back down a little bit, but we see the market started off pretty good and it's starting to roll over. Let's take a look at cryptocurrency now. 364.9 billion, 59.3% Bitcoin dominance. I don't like the look of that Bitcoin dominance. Even though the Bitcoin prices went up to $11,674, I don't like the fact that the Bitcoin dominance is so high. That's a bearish signal on Bitcoin. It means that they're buying in and they're letting go of their altcoins, and they're buying into Bitcoin. That's when the Bitcoin dominance goes up like that. And that's a nervous market when that happens. It starts to become a nervous market. So let's take a look now at the Dow Jones. 76 points to the downside right now. 28,529. I think it was up a little bit earlier, let me see. Let me get the one-day chart here and take a look. It's been sliding off all day, the market. Today's a big day in market history. Today, we've had crashes on Monday. This is a Monday where we've had crashes in the past on this particular day. But I don't really see a crash happening today. We see the Dow going down a little bit today, But this has been an awful big boom for the Dow. Let's take a look now at crude oil. 41.07 for crude oil. It's up 19 cents on the day. Now, you remember I told you they're keeping the price right around 40 bucks, more or less. Russia and China now Russia and Saudi Arabia right now are actually working together very closely to protect and guard this oil price. Let's take a look at bonds and rates. We're looking at the bond yields rising today, and it's not insignificant. It's more than 2 basis points. Looking at 1.55 on the 30-year, and we're looking at 0.76 on the U.S. 10-year. Now, I told you they're going to keep the U.S. 10-year around 0.75, and it's 0.76. So it's getting up a little bit high for what they like. And the U.S. 30-year, they're going to keep it at 1.5, and it's at 1.55, so that's getting a little bit high too. They're going to keep their eye on that. Let's take a look at the MOVE index today. We're looking at 57.25, and it's up 1.63 on the day. We see the MOVE index is still creeping upwards. If this MOVE index, I figure, goes over 100, watch out for stimulus. So that's why we're watching this MOVE index. This is my meter for stimulus. If we go back and we take a look at the 1-year chart on the MOVE index, I'll show you. See that mountain right there where the MOVE index went all the way up to 163 on the 9th of March? Well, just a few days later, the big stimulus came out. And I think that's what triggered the stimulus. I think that the credit markets were starting to freeze up. And that's the reason why they protected the credit markets when they had the big, can't think of the name of it right now. I'm having a brain fart. But they had to protect the credit markets way back in September through the... I hate it when I have a brain fart. Anyway, these is the credit markets. And when this MOVE index gets too high, the credit markets are in danger of freezing up. And they're not going to let that happen. They're keeping their eye on this. They're not really keeping their eye so much. So we're keeping our eye on this MOVE index. Let's take a look at the U.S. dollar index. 93.27 today, and the dollar's dropping down a little bit. Now for our funny picture of the day. I'm going to tell you about cats. When you let a cat out into your yard, your cat is on safari. Quite seriously, he's on a safari. It doesn't matter if your yard is not in the deepest jungles of Africa. In your cat's mind, it might as well be the deepest jungles of Africa. And those little birds that are fluttering around in your yard and stuff, and squirrels and stuff like that, those are, he's almost like a lion hunting through the safari, you know, and cats really enjoy being let out in the yard so that they can go on a safari. Anyway, listen guys, thank you for listening to my show this morning. Like and subscribe, give me a thumbs up, and we'll catch you guys in the very next episode. Bye-bye.